All right, so I'm a little bit behind on doing my reviews. So I'm doing the review from a couple weeks ago, about a week and a half ago, on the 23rd of December. I hope everyone had a great Christmas and New Year's, but let's get right into this. Maybe. There we go. So first off, I wanted to talk about a trade that I kind of left off on the last review, that I ended up asking Thomas about to get his opinion. So here is the trade that I was wondering about. I was wondering why you can't take this failed second entry short. You can see the first entry, second entry short there. And I was wondering why we can't enter right here. And I couldn't quite figure it out because I was looking at some similar examples where Thomas did take them, like this one to the right here. And basically, he was saying that the most important piece is looking at the retracement on the top here. So you can see how this one retraced basically the entire downtrend here, or the entire pullback. And this one did not. It has a lot of room to the pullback. But that makes me think, okay, well, there was one that did retrace a lot of that pullback. And that's this failure right here. You can see that the uptrend for the highs before the failure triggered, you're basically getting all the way to the highs right here. So why can we take this failed second entry? And Thomas says that it's basically because you are trading under different contexts, which totally makes sense. But in particular, this context is an uptrend from the start of the day. So if we go back here, you can see this is the start of the day, and you've been trading up for the entire day. So the context is a little different. Whereas if you go back here, both of these were uptrends later in the day. This one, the one that I did take, was an uptrend for basically the entire day, which, yes, is strong, but at some point you're expecting prices to roll over and you might not get a retest of that high. So basically he's saying that there's a very high chance that you're going to retest the highs of the uptrend from the start of the day. And he brought up this similar situation here where even if prices do move sideways, there's still a very high percentage chance that you're going to do that. And my takeaway here was that it's all about the context, of course. There's no surprise there. But also, when prices have retraced so much, it's considered an aggressive setup. So whenever you do have the retracement, like this here, where prices have basically retraced all the way to the highs, well, that's an aggressive setup. And you only want to take that under the best context situations. And I was thinking that this being a very strong uptrend for basically the entire day was a very strong context situation, and it is, but it's not the strongest. And you really only want to take these aggressive setups in the strongest context situations, and of which the uptrend starting at the beginning of the day is one of the strongest context situations. So just wanted to touch on that and come back to that. But getting into the 23rd here, and my performance on the 23rd, and some places that I kind of messed up and that I think that I would like to improve. So first off, I started off with this uptrend being a possible overshoot. So I had the line right here. I had this as a possible overshoot. Well, I then widened this after prices bounced right here. But that wasn't the right move. I shouldn't have done that. And the reason that I could have known is because after prices, even though they did find a little bit of support there, look how they failed to reach the channel line. They failed to go up here at all. And so after prices pushed through pretty much immediately after and pretty strongly after, then I should have just gone ahead and treated this as an overshoot. And it almost messed me up because I started to look for this second entry long. And of course, there's no good signal bar there. And that's the reason that I skipped it. But there's a few other things to consider. First off, this downtrend does not have a break in new low down here. So there's no break in new low for this downtrend. You're still expecting that. So this is an aggressive setup anyways. The other piece is, I was seeing if I could hold shift there. This is really a range right here. And so you're working sideways. You're working under the impression that there could be a possible overshoot here. And this downtrend does not have a break in new low. So there's a lot of reasons why you can't take a long here. That's way too aggressive. So lots of places where I kind of messed up there and should not have been looking for a trade, and I got saved by the signal bar. Now next, at this point, it was clear after prices pushed so strongly back below the EMA and did not retest these highs that this was an overshoot. So I switched it there. Great. Solved this as a range. Great. Yep, that's correct. Cool. And now I started to look for a short as a breakout pullback. And also if you're counting off of these highs here, then you have a first entry, second entry, failure, and also a first entry, second entry, short. So basically 2 reasons to go short there, plus the breakout pullback, plus looking for the break and new low of this downtrend. I thought that was a great trade. But Thomas didn't think so. Thomas said that it was too sideways and that the EMA is in the middle of the bars. You can see that there. And this kind of surprises me. I didn't think that that would be a good enough reason to skip it. So it makes me wonder that if prices had held below the EMA here before that next bearish bar, so if prices had held below the EMA instead of pushing back above, would that have been a trade that's marked? And I think so. But yeah, that kind of surprised me. I guess I just need to pay a little bit more attention to the EMA being in the middle of the bars there. Now, downtrend has a break and new low. All the downtrends have played out, and I'm thinking, okay, possible reversal. And you have a first entry, second entry short after prices popped above the EMA with a pretty good signal bar right there. So why can't you take that? Well, the reason I didn't take it was because of this channel working higher. I didn't want to take it into the channel line. That would have been going directly into the channel line. Also, if you draw a shorter term uptrend like this, then it looks like you have 1, 2 legs up, 1, 2 legs up. And there's just one thing I wanted to kind of note here. First off, I did already touch on the fact that it does look like 2 broader legs up, but it's a throwback to a previous note that I was talking about in a previous study session, that it's okay for the uptrend to have a break a new high, and it's even okay for it to kind of look like 2 legs sometimes, but you need to be able to draw a wider trend if you're going to do that, and clearly you can't draw a wider trend here. Like, it's not even just the fact that it's going into the channel line, you just can't really draw a wider trend there. It just doesn't fit quite right. And so that's really what you need to be looking at. Just, okay, this looks more like 2 broader legs and you can't draw the wider trend. Even though it is going into that potential channel line, there's just more to it. That's why I wanted to mention that. Now, here's a trade that I was very surprised to see Thomas marked. And the reason is because this downtrend already has a break a new low. And then this downtrend, so both these downtrends, the major downtrend and the secondary downtrend, already have a break a new low. Everything's played out at this point to the downside. And the reason that he marked it was because it's a lower high below the EMA with great momentum and a nice signal bar. He did say that he didn't really see this, or maybe he didn't, feel confident in it in real time, but he marked it in hindsight just as a way to study. And I would have had a really, really hard time taking this trade in real time because the downtrend, like I said, all the downtrends have played out. And the way that I was viewing this was like this at the point that this trade triggered. After the downtrend played out, I was willing to draw my uptrend a little bit wider, which I felt was correct. And so really, I was questioning, okay, how do I know that the uptrend is going to be tighter? How do I know that it's already played out like Thomas has here to be able to capitalize on a lower high there? I think this is a more advanced trade regardless, but how could I know that? And so I started looking at, oh, well, hold on. Before that, you could say, yeah, it's not reaching the channel line here. So, if you did have it drawn like I did, okay, it's not reaching the channel line. Maybe that's one reason, but there's a potential to draw it a little bit tighter like this, and that fits really, really well. If you draw it nice and tight like that, prices are coming off the channel line, they're bouncing off the trend line. So how do you know that this is tighter? And I don't really have a great answer for this, but I wanted to look at some similar trades here, and I did skip over that past slide because it's just not super important. So here we have a similar situation. I was really looking for places where it kind of looks like 2 broader legs up, or places where you could maybe draw a wider trend, and that it was the second leg. So here you can see 1, 2 legs up after a downtrend had played out. So kind of similar characteristics there. And what I was wondering here is, would we take a failed second entry or a lower high if it's set up at this point right here? Because it looks like 2 broader legs up. And I mean, if we did draw this, of course, I don't think you can really draw this like it played out. I don't know, just kind of a question, one that I saw that was similar. Of course, the trade didn't trigger there, but just a place where I was curious and wondering and found something similar to compare it to. Now this one I was looking at because it's very different in the fact that the second leg becomes a lot larger. So you have the first leg here, you get the break, and now this is really the second leg. But you see how prices don't ever push back below the EMA, and the second leg just continues higher. So this is very characteristic of a reversal. So comparing this one to this trade, you can see that we did push pretty strongly back below the EMA, whereas this one, the uptrend continued. So just contrasting the reversal compared to the trade from the 23rd or whatever day this is. Now here's another example. The uptrend played out, but you get a very strong push through the EMA. So I wanted to look at, okay, this is an extremely strong push through the EMA, and it does lead to a reversal after all. And so if we look at this, this is a push through the EMA, but it's not quite as strong. Prices don't have or aren't getting super far away from the EMA. There's a few bearish bars in there, so there's that difference there. Just trying to determine, okay, well, what kind of push through the EMA makes you think that this is or is not going to be a reversal? And you can see that the difference in this push here, super strong push down, you get a little bit of bullishness, but you really rip away from the EMA there. Now, this one I was looking at, just after the downtrend played out, you do end up getting kind of that retest there. First off, there is this potential spike in channel. I don't think that you'd be sure about that spike in channel. So I was kind of looking at this just as this trend having a break in new high here, and then you get like 1, 2 legs down there. You do pop back above the EMA, but really the interesting point here for me was this broader downtrend where you get that break in the extreme. Even though there's a second leg, that looks like, I think that I would be tempted to draw this like a short-term downtrend with a break in new low, just some sideways action, and then you get like another leg here. I'd be tempted to draw it that way, and this is something that I mess up decently often, in that the second leg can sometimes be larger. So you can see that it's this weaker downtrend right here. I kind of didn't draw that great. So it's this weaker downtrend here that gets a break and a new low, and the second trend is larger. And that's kind of similar to this trade back here that, even though like you could be looking at this like short-term uptrend break and second leg, even though the second leg is larger, you can still sometimes view this as 2 legs in and of itself. And so here, even though the second leg is larger, and I'd be tempted to draw this as its own trend, maybe it's actually just 2 legs. And then you come back up and you do move higher before prices do reverse. So none of those were like one-to-one comparisons, but just places that I thought were a little bit similar and that I just wanted to compare, contrast. Oh, we have one more here. So now this one, we have a broad break and new low, pretty similar to the other one. And you have a short-term uptrend that could be drawn like this, or it could be drawn like this. And so kind of 2 possible scenarios there. And why would you not be looking for shorts after prices come back below the EMA? So first off, of course, the downtrend did have a break and new low. But that's a pretty strong push back below the EMA, and you can definitely draw this, with a closeout side and new high as far as the short-term uptrend goes. So why wouldn't you be looking for a short as it comes down here? Well, for one, there's a lot of range support here, and that really changes the overall context, even though there is the break and new low. This is a very broad break and new low, and it's something that I've heard Thomas talk about before. Whenever you have a sort of broad break of a downtrend, then you can go ahead and draw the range, and in this case the range fits pretty well, so you don't want to look to take any more shorts. Again, that's pretty aggressive place after the downtrend has already gotten a break and new low to be looking for a short anyway, but just wanted to look at some similarities, some differences, and we'll go back here. Now I was thinking about potentially taking a second entry short here off the EMA, because at this point this is, we're back to, this was the break and new low. So the downtrend was back here. So you have downtrend, break, new low. The prices are continuing down. They're staying below the EMA now. So I'm at this point, I can't really find a larger trend. I played around with some things. I tried drawing something like this, and I couldn't get it to quite fit, especially after the possible overshoot here. That really confused me. But I felt like pretty solid that, okay, we are continuing down. And so I was looking for a short here. And I was thinking, okay, if this short-term uptrend has a strong close outside, then I'll probably take that. But that was too aggressive given this overshoot. So at this point, this could be a potential overshoot right here. So this could be a potential overshoot. If you draw this a little bit tighter and off of this, then that can be a potential overshoot, a small one. But there's that. And then the other piece is that if you do draw the wider trend like this, then you definitely have some kind of overshoot. And I think that's the way that I should have been viewing it at this time. This downtrend already had break a new low. Prices are continuing lower, so you want to look for some sort of wider trend at this point. And this is kind of your best bet. And even if you did draw it like I did, you know, a little bit like tighter there, then you still have a possible overshoot down there, as I was showing earlier. So there's a couple of reasons why you don't want to take it. And ultimately what ends up happening is that this was just a downtrend with a break and a second leg down. So you can see these are measured right here. So this arrow, I just copied and pasted it. It's almost measured. So you basically have two larger legs down made up of two smaller legs. So you have a downtrend with a break and two legs down that creates two broader legs down. And that's what ends up happening. And basically I was looking at this structure as too small. I was kind of too zoomed in and thinking, okay, we're headed down, but I needed to zoom out, take a look at it and say, okay, what does this look like on the larger structure? And really this is the larger structure. And that's it. That's all I have. So I feel like a lot of these were like kind of more questions than answers, but just wanted to make sure that I reviewed these past days, make sure that I'm learning what I can. And I'm going to review the 24th, probably either today or tomorrow. So that'll be up at some point.